Before we get started, I want to remind everyone that the information in this presentation is not to be or construed as investment advice. The information presented are subject to change without notice, and while we have made every reasonable effort to ensure that the content is reliable and accurate, we have not independently verified the content and are not responsible for errors therein. Please consult a professional advisor before putting a loonie in any of these financial markets. Hi everybody, my name is Richard Diaz and welcome back to the IceCap Canadian Market Wrap. In this week's episode, we're going to discuss the growing weakness in the Canadian labor market. Like much of what we've discussed over the last few months, the labor market is exhibiting trends that were in place before the trade war. What we are seeing is simply a continuation of this. In our view, even if the trade war were resolved tomorrow, as we have discussed at length, Canada is very much mired in recession and unemployment would very likely continue to rise. The economy simply cannot absorb the number of people still entering into Canada. So let's get into it. There are two types of employment data series. One is called the Survey of Employment Payrolls and Hours. It offers detailed payroll-based data on wages, hours, industry-specific employment, but excludes self-employment. It's also less timely. The second, and the one we'll be focused on today, is the Labor Force Survey. It provides timely monthly data on employment, unemployment, the labor force participation from a household's perspective, and includes self-employment. In last week's release, employment fell by 32.6 thousand for the month of March. This was the first major decline we've seen in 2 years. We'll touch on the unemployment and participation numbers in a minute, but first I want to provide you with more color on the data set. The Labor Force Survey provides details on employment by sector. And as you can see, most of Canadian employment is in the service-producing industries, but manufacturing and construction are clearly sizable chunks of the labor market. A look at the change in employment over the month can provide further insight. At the bottom of the chart, we note a large drop in trade. This includes retail and wholesale trade, suggesting that the decline is part of the unwind from the GST Holiday Sugar Rush. At the top, some good news. Professional, scientific, technical services, as well as other services improved. Public employment also continues to rise, and we'll touch more on that later. A look at the unemployment rate really highlights that the softness in the labor market is well entrenched. The unemployment rate rose to 6.7%, and there are 1.5 million unemployed Canadians. This is nearly a 15-year ex-COVID high. Digging into the unemployment number a bit further, and we can see the real pain is in the GTA. Unemployment in Toronto is at 8.8, nearly 2% higher than that of Montreal or Vancouver. And again, this was happening long before the trade war started. With the housing market on the fritz, we expect this figure to rise even higher. This weakness in Canada's most important economic hub will also have knock-on effects to the rest of the country. A look at the participation rate is also important. Labor force participation is the percentage of working-age people that are either employed or are actively seeking employment. Prime-aged, between 25 and 54, are particularly critical as these individuals are in their peak working years and represent a significant portion of the workforce and contribute substantially to the economic output and productivity of an economy. And here there's some decent news. It has fallen a bit, but remains extremely high. However, the fall in the employment ratio is cause for concern. And here we are flirting again with 20-year ex-COVID low. This is largely because of the insane immigration policy that was enacted by the current government. The chart on the left highlights how crazy it really was, and you can make the case that nothing much has changed. There were too many newcomers for the work available. The red line, population growth, massively outstripped the two blue lines, the two labor force surveys. And there has been a real cost to this supremely reckless policy. We have talked about the housing market and the productivity emergency that are a direct result of the millions of unskilled, low-wage immigrants coming into Canada. And as you can see on the right, it has directly affected the price of housing, and in this case, rents. But for young people, this influx is particularly jarring. We note this in the participation rate of the youngest cohort in Canada, as they have been effectively pushed out of the labor market by newcomers. Participation rates for young people has always been low, but the recent collapse can be directly attributed to the massive influx of so-called students. The last two charts of the week focus on the public sector. It highlights the outsized contribution to employment growth over the last 2 years. At one point, 4 out of every 10 people hired worked for the government. This is totally nuts. Canada now has one of the highest share of public sector workers in the OECD, and this is no doubt contributing to Canada's productivity emergency. That's a wrap on this week's episode. Thank you very much for listening. Please like, subscribe, and follow for more. And as always, we manage money for families all across Canada and the world.